Bear markets, they're nothing new in crypto. In fact, there have been roughly 3 of them in the industry, from which some interesting theories have been drawn. For instance, drawdowns from peak to bottom in each cycle are getting smaller, as well as a theory that ties Bitcoin's bear and bull market to its halving schedule. See, after every 4 years, block mining rewards are reduced by 50%, and every single Bitcoin's halving event, that is in 2012, 2016, and 2020, has led to significant bull runs. Now, there are other parallels being drawn, so let's find out more by jumping straight into examining Bitcoin cycles, starting from July 2010, roughly 2 years after Bitcoin was created and when the first accurate Bitcoin price tracking occurred. Bitcoin began trading at a fraction of a penny, but climbed to around 9 US cents by month's end. After 2 months of sideways price movement, its price started to rise in October and peaked in June 2011 at around $30, a whopping 33,000% rally. In the same month, however, the first Bitcoin crash tied to the Mt. Gox hacking incident happened. Mt. Gox was the largest crypto exchange at the time, where the majority of Bitcoin was held and traded. The hack caused Bitcoin's price to temporarily fall by over 99%, from around $17 to just a penny in just a day. But the crash didn't last, though after the recovery, prices began to fall and bottomed at about $2 in November. So in approximately 5 months, Bitcoin lost over 93% of its value. This marked the end of the first cycle and the beginning of the second cycle. The second cycle began with a steady rise in price, followed by a rather uneventful year, except for the first ever Bitcoin halving, which occurred in November 2012. This event reduced mining rewards from 50 Bitcoin to 25 Bitcoin per block. Bitcoin's price started steadily rising until it hit a new all-time high at around $267 in April 2013. However, this was followed by a sharp drop to roughly $60 less than 2 months later, and immediately followed by a price rally that peaked at $1,244 in December, marking roughly 2 years since 2011's bear market bottom. After the 2013 peak, a bear market followed, this time seemingly kickstarted by the Chinese government's decision to ban banks and other financial institutions from trading and storing Bitcoin.
They essentially have cut us off from allowing customer deposits into BTC China's Bitcoin exchange.
The bear market saw Bitcoin touch $165 in January 2015, an 86% drop from the cycle's peak. The following cycle did not have any major price movement for the better part of 2015. It wasn't until the end of that year that Bitcoin seemed to be breaking out of the 9+ months of consolidation. The second Bitcoin halving happened 9 months later in July 2016.
Bitcoin halving in Amsterdam. Hello.
Yeah. This occurred during the bull run that saw Bitcoin hit a new all-time high towards the end of 2017 at just under $20,000, a 12,021% increase in 3 years from 2015's bear market bottom. You may feel some nostalgia remembering that this was the bull run of the ICO boom, which in turn also contributed to Bitcoin's significant rise in price. However, after 12 months of volatility, Bitcoin hit the bottom in December 2018, and the downtrend was accelerated by announcements from countries like Japan and South Korea of different measures to better regulate crypto trading. So this marked the end of the third cycle and the beginning of the fourth cycle. So the start of this cycle was promising after Bitcoin's price climbed from around $3,000 to $13,000 in a span of 7 months. This was, however, followed by a steady drop in prices and sideways movement for over 12 months. during which the third and latest Bitcoin halving occurred. In March 2020, Bitcoin crashed due to the announcement of the COVID-19 pandemic.
COVID-19 can be characterized as a pandemic,
but swiftly recovered, leading to the next bull market. After an impressive run in 2021, Bitcoin peaked in April at around $63,000 before a sudden pullback that lasted less than a month, and this was followed by another bullish run before the digital asset hit its current all-time high at $69,000 in November 2021, a 2,056% increase from 2018's bottom. The bull run, however, ushered in the 2022 crypto winter, one of the longest crypto bear markets in history, just less than 2 months shy of becoming the longest one. So it all started with the Terra Luna fiasco. Terra's crash not only affected Terra's investors, but the whole crypto ecosystem. Bitcoin and crypto were dealt more blows by other sagas, from the fall of Celsius, then 3 Arrows Capital, then Voyager, and even FTX, one of the biggest exchanges then. As we have seen, Bitcoin's history shows a pattern of bull market returns shrinking from pumping more than 33,000% between 2010 to 2011, down to 12,000% in 2012 to 2013, and further down to 2,000% in the most recent rally. At the same time, though, total drawdown from peak to bottom has also been decreasing, from 93% in 2011 down to 86% in 2015, down to 83% in 2018, and further down to 76%, assuming Bitcoin hit the bottom at 15,800 in November 2022. Of course, theorists and Bitcoin enthusiasts have all eyes on the next halving event, which is due to take place next year. So, going by this theory, there are still more months of depressed market action before momentum builds. But even if it does happen, the days of bewildering returns may well be over now. Well, what do you think? Do you think Bitcoin's history will repeat itself? Well, give us your thoughts below, and also make sure to click on this video right here to learn about some costly mistakes that you could already be making during the bear market, and also how to avoid them.